Hey traders, John Howell here. Happy Easter to everyone. I'm so excited because I see so much potential happening in these markets right now. So in this video, traders, what I want to do is I want to share with you the one thing that gold does that flashes a recession is just around the corner. Now when I say just around the corner, within say 6 or 12 months. So there's one thing that gold does, and I'm just going to share with you all the details in this video so we can prepare for what's to come. So let's get straight into it. Don't place a trade based on what you'll see in this video because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Alrighty traders, so let's get straight into it. Traders, I actually just recently recorded a brand new trading course. It's my best trading course that I've done to this day, and I'm giving away for the first 100 people. I'm actually giving it away for free. So if you go to johnsfreegift.com, the very first link in the description, you can actually go get that for free. I've still got, I think, about 20 spots left open, and then after that I'm gonna shut it down, get the feedback, and then I'm gonna start to charge for it. So again guys, make sure if you go there, because I promise you through the whole trading course I'm going to really talk to you about what's stopping you from moving forward, the chart reading strategies, what I call the X factor, and there's just so much in this. Anyway, guys, you'll be able to see that. So make sure you grab that before I start charging it, or you can actually you can pay me for it if you want to later on. So again, guys, very first link in the description. So let's go have a look at gold here, okay? Because gold is there's something that happens during a recession, or gold does a certain thing in the markets, right? It's like a flight to safety. And what tends to happen is you'll see that there is a lot of funds that filter into gold, and gold makes a really big move prior to a really big recession in the markets. And so what gold tends to do is gold tends to really make a really big move. So let me explain what I mean here. So if we go back and have a look at the 08 period, let me actually bring up, this is the weekly chart here. And why is the market closed for? Damn it. Anyway, so just make sure you're doing your analysis. So if I go back to the 08 period, I want to share something with you here. So actually, I've got to bring up the GLD because I can't get enough data back here past 011. So let me bring up the GLD, and then I can go back to the more data in the market. And so if we go back to what's happening right now, okay, if we go back to what's happening right now or if we go back to the 08 crisis, let's actually bring this up here. You'll notice that gold does something, right? So gold starts to make a really big move out of nowhere when it starts to sense that we're getting very close to the top in the market, and there is a recession that's coming around, right? The smart money is giving us a bit of a sign here. And so you will see, look at this here, right? So look at this here. So what happened, and it's so fascinating because what's happening with gold right now is so like pretty much spot on what actually happened back in the 06, 07, 08 period. So let me explain what I mean here, right? Look at this here. So look what happened with gold. Gold actually did nothing for a long time. And this actually looks like exactly what gold did now. Gold actually went for a big move. And as you know, gold actually went for a big move about a year and a half, 2 years ago. And then look what happened with gold. From basically the start of, or the middle of 2006, guess what happened? Middle of 2006, we actually did what? We did basically nothing, right? We did nothing. What's been happening with gold lately for the last 1 to 2 years, right? So gold went for a big move here. What did gold do? Nothing. Then gold did nothing here. But guess what happened? When we started to break out, guess what? When it started to break out, it was telling us that there is now a flight to the, I was going to say call it currency, money, metal, right? There is a flight to gold, and that's actually giving us excuse me, That's that's actually giving us a sign that a recession is just around the corner. So this is what gold does. Gold goes for big moves, really big moves, and it breaks out and starts to make a really big move when it starts to sense that there's a recession around the corner. That's why, one of the reasons why I believe that we're not getting close, we're not near the top yet in the markets. Because what's likely to happen is if I just blow my chart up a little bit more, and if I bring up to what's actually happened here, what's happened now, the pretty much the exact same thing that actually happened back here in gold. The exact same thing, right? Look at this here. Market moved up, and then we went what? Then we went sideways for a while. So we had a big move up. So this is step one, big move up. Look at this here. Well, you could do that. It depends on where you want to do it, right? But we actually had what? We had a very big move up. We could do this whole thing from here to here, right? From there to there, right? So this is what? Step one, very big move up. Cool. Step two, look at this here. This is a maybe 1 to 2 years worth of gold doing nothing. Remember, this is before the '08 crisis. History doesn't repeat itself, but it definitely rhymes, and it can give us some secret sauce. But John, you don't understand. This time is different. Yeah, you're right. This time is different. Gold, you know, you're gonna see probably the GLD hit 300 by the time we see the recession start. That's why this time is different, because we're gonna see much big moves, right? But look what happened here. Step one, big move up. Step two, it went sideways for a long time. A long time, right? A long time. So we had a big move for a long time. This was what? Step two. And then guess what happened? In the middle of '07, we broke out above the highs and we went for a big move up. So right now, this is actually step number three. So this here is step number three. And I expect to see the GLD hitting around the $300 mark, because I have a 3,000 target on gold. So looking at the GLD, I see that GLD is probably going to hit around, again, that $300 mark, looking at the gold price there. So we can see by looking at what's actually happening here that gold's not flashing the warning sign yet, right? There's been a lot of talk about how we're at the top of the markets right now, and there's a massive recession out there right now, and we've got the inverted yield curve and so on and so forth. So that's basically, we're getting all of these, the talking heads about what's happening, okay? We've got the potential war in Russia and Ukraine. There's a potential World War III. You know, the inverted yield curve and all that sort of stuff. And now we're looking at the gold, right? If we actually look at the big factors that actually move, that really make a big difference in these markets, right? We have inflation, and we have all these different things here. As we speak right now, we're not near the top in the markets. We're not. Because what's likely to happen is that we're likely to see the interest rates maybe keep crawling up for a little bit more. Okay? Interest rates, the very first interest rates as markets move up, is actually when we start to raise interest rates, we are roughly around 6 to 12 months from the top. Okay, what happens with and then we start to get in an inverted yield curve, right? So if I bring this up, look at this here. So let me actually bring this up here. So this is the inverted yield curve. But by the way, guys, as I'm bringing this up, this yield curve here, if you go to gurufocus.com/yield_curve, that's where you're going to be seeing what's happening here, right? So, by the way, guys, the biggest recession is coming, right? The greatest recession is coming. But what's going to precede that? Is that the right word? Precede? Happened before. What's going to happen before the greatest recession of our lifetime is what? We're going to see one of the greatest vertical moves of our lifetime. Everything is going to be going crazy. And everyone's going to be saying, oh my goodness, here we go, right? Here we go. And it's like, Meaning what's like, why aren't you in the stock market? Why aren't you in gold and silver, right? You're going to start to get these talking heads out there. We're just not getting that yet. So please, guys, if you are trying to short the market right now, hoping the market's going to go down because of a thought, right? So, something that doesn't really affect the market that much when we think about it. So when we're looking at the yield curve, this is what the yield curve looks like right now, right? April 2022, we've got the yield curve down the bottom here. This is the short end. This is the long end. This is not what the yield curve looks like when we're going into recession. Let's actually go back to the prior to the 08. Prior to 08, look at this here. Let me just bring this up to here, right? This here is what an inverted yield curve looks like. This is a proper inverted yield curve. Look, we have the short end up here, and then we start to make our way down through here. So the short end is really high, long end is down. Then we get what? That was in July 07. And then guess what? Did suddenly the market crash that day? No, right? It went through from July all the way through to 08. And then 08 was roughly it getting to the top, and then the end of 08 was what? The bottom. And then guess what happened? And then when the market crashed, they dropped the interest rates, and then the yield curve went back down to zero. The short end's down now zero. The long end is now up the top through there. We're starting to see what? We're getting a very big what? We're getting a nice good yield curve, right? Same before the 08, right? Same before the 2000 bubble. Look at this here. Look at this here. This is what a yield curve looks like. And this is a really big thing here. Look at this here. Short end up, long end down. That's when you should be worried, yes. But is that the top in the markets? Well, sometimes it is. But, or should I say, most of the time that's given us a warning sign from, because that was, geez. Most of the time you're actually getting this here. It gives you about a 6 to 12 month lag. Now, and if we bring the back down to the bottom here, the bottom of there, look at this here. Long end, short end down near the lows, long end up. Okay, so let's go back to here. All right, traders. So this is what's happening here. But now look what's happening where we are right now. Like, again, the big things that really control the investments in these markets here is obviously the yield curve. Yes, but the yield curve needs to be up here somewhere. We need to start to get the yield curve coming up through here, like something like there, and then we start to get the yield curves like flat. If we can start to get it flattening out like we did back here in the 07 period, right? And then we get that period through there. Yes, that's when we're going to start to see a big recession in the markets. Okay, but right now we're not. And as you can see, it's not the very first time they raise interest rates. They raise interest rates. Look at this here. They raise the interest rates for what? For quite a bit of time before it starts to like, look at this here. They raise it. Just ride it. Just ride it. Oh, recession. Oh, look, they raise it once. Oh, just ride it. 12 months later, oh, recession. Look at this here. We just rose it once. Just ride it. Oh, recession. Make sense? But this ride it is probably about 12 months with the time frame to get this point up here to give us the inverted yield curve. No, I don't want to do that through there. No. So if we have a look at, if we overlay what's happening now, yes, one of the greatest recessions of our lifetime is coming. And if we can just be alert of that, millions upon millions of dollars will be made from the next recession. Yes. But we're not there yet. Okay, yes, inflation is picking up, right? And we're getting that, but we're not getting we're not getting the full picture of saying that. Yes, we're getting the interest rates starting to rise, and that's actually putting a bit of a dampening fact, but we're not at the top of the markets yet. Again, the big things you'll really want to keep an eye out for to tell us at the top of the markets is one, the actual yield curve, yeah, but we want to see more consecutive rates happening throughout the rest of this year, depending on how fast they raise. If they start to raise them half base point, right, not just quarter base point, yeah, now we're starting to supercharge our way to there. But then what's going to happen is we're going to start to get the yield curve inverted. We're going to start to get that. what's also going to start to happen is we're going to see gold go for a big move. We're going to see gold take off here like it did here prior to '08. And then, yes, when the next recession happens, everything is going to get smacked. Everything will get smacked. The stock market's going to get smacked hard. Gold and silver is going to get smacked hard. Gold and silver mining stocks are going to get smacked hard. They're all going to get smacked hard. But then on the other side of that, guess what happens? Now they've got, when we go through the next recession, guess what? We're going to go through what? A massive round of QE again. And if you think the vid situation, when we did an atomic bomb in these markets, get ready over the next couple of years when we do go through the recession, because when they start to release the next QE package, it's going to be 2, 3, 4 times as big as one that we did in the vid situation. And that alone is going to create an amazing buying opportunity in the markets again. And then we're going to just see, that's when we get that. That's when we're going to see real inflation. Like you think you've seen inflation now? No, on the other side of that next recession, because of all the money they're going to print, they're not going to stop printing money. They're going to just keep printing it and printing it and printing it, right? On the other side of all this, on the other side of all of that next recession, that is coming, but not now. First, we have what? First, we have a run in everything. Because we're not at the top of the markets yet, right? We at tops of markets, we get so much optimism in the markets. Oh my goodness, here we go. There's so much negative news in the markets. Like, we're nowhere near the top of the markets. Firstly, we're nowhere near the top of the markets because just sentiment is just so bearish. It's like, we're going to get ready for a massive slingshot. Secondly, when we're looking at these markets, secondly, we're not getting the inverted yield curve yet, right? They haven't actually continued to raise interest rates. Thirdly, we haven't seen gold actually make a big move like it does before recessions. Gold makes big moves because it's like a flight to safety, so to speak. So we're not getting that yet. So over the next 6 to 12 months, we're going to start to see gold go for a big move, the stock market go for a big move. They're going to start to continue to raise interest rates. And then guess what happened? Then we're going to get smacked. But on the other side of all this, on the other side of everything coming down, on the other side of the boom and bust, right? So we're going to see a very big boom. This is where we are right now. Over the next 6, 12 months, we're going to see this here. Everyone is going to be talking about, how you should be in the stock market, and you should be gold and silver, and you should be doing this and blah, 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 because the market is taking off and you're an idiot if you're not, and so on and so forth. And then when we start to see all that, right, when we start to get all of that happening in the markets, that's when we're getting very, very close to the markets, because we're starting to get this over optimism in the markets. And then you're going to see gold going up, and then there's going to be this massive optimism about the stock market and so on and so forth. And then guess what? And then, then there's going to be a top in the markets, and you're going to get spanked really hard. The market's going to just pull back hard. I don't know how much by, but first, what's likely to happen is we're going to see a very big move in the stock market, a continued raising of the interest rates, maybe. That's a question mark. We're going to see gold go for a big move, and then we're going to see a very big pullback, and then there's going to be an atomic bomb after everything gets smacked, and then that's when the real inflation happens. That's when we see gold from, if we have a look at the actual gold price, what I see happening is this. All right, so let's check this out here. So what I see happening is this. I see gold race into 3,000 from here, right? I see gold. And again, why? Because it's the exact same thing that happened prior to '08. We had a big move up. Now we're not doing anything for quite some time. We're probably going to break out soon. When we do break out, we're going to make a very, very, very big move to the upside here. When that happens, we're probably going to be getting very, very close to the top in the stock market as well too, and the top in the markets. We're going to see a rapid move in the stock market. We're going to see a rapid move in gold and silver. Then we're probably going to get spanked through here when the recession happens. Then they're going to do the next biggest QE, and then when they see the next, and then after the next biggest QE. So let's actually see if can I bring this over here? I can, yes. So then I know this sounds crazy, but that's when, you know what? Let's actually just bring up. I'll just do a conservative approach. Oh, let me do a conservative approach. So this is what I see happening with gold. Okay, this overall move from here. From here, right now, we get a very big move to the upside. When that happens, we know we're starting to get very close to the top in the markets as gold starts to break out. When gold breaks out, we're going to make it tremendous moves. And so once that happens, the next recession is going to happen. It's going to get spanked. Everything's going to get spanked. We're going to see a big recession. They're going to come out with a massive QE package here. This QE package is probably going to be 3 to 4 times as big as what we got back in the vid situation. Guess what that's going to do? That alone is going to do what? That's going to start to really churn everything massively. That's when you're going to start to see the US dollar get spanked hard because of just the massive amounts of QE they're doing. And then on the other side of this getting pulled back through here, right? Because we will get a pullback in metals and miners. But when we get that and we get the big QE package, what's going to be the winner on the other side is not going to be stocks, I don't believe. I could be wrong, but I believe this is the decade for the metals and miners. And then we're going to see a rapid move. Let me bring up a different color here. And then we're likely to see, after we get spanked for a little bit, then we're likely to see, and we get the biggest QE. Now, again, this actually could be, I could be off with the timing here, right? We could be in 2025 by the time we get the recession. We don't know. But when we do get that and the next big QE, that's when we're going to see probably gold race up to $5,000. Possibly even $10,000. I truly believe, because once all this happened, this is over here. This is when the new world, the NWO. Hey, that's a wrestling term, NWO. The New World Order is starting to come into place. That's when the digital dollar is going to start to be introduced even more. That's when we're going to start to use, they're even doing it right now. They're even starting to use some of the gold. I think gold now backs a portion, or gold backs, I think it's maybe 4 or 5, ruble or ruble in Russia. They're already starting to do this right now. Right? So gold is going to become a massive play in the markets. But this is how I see it happening through. Step number 1 is we see a very big move happening in there. Just like it, and all I'm doing, guys, is when I'm looking at gold, I'm saying, okay, how does gold really operate when it comes to recessions, booms, busts, and cycles? And all I'm doing is, if I go back to my GLD price, all I'm doing is I'm just going back to what actually happened here. I'm just going back prior to this one here. Look at this here. Right? We had what? We had the step number 1, big move up. Step number 2, nothing going on. Step number 3, and actually, you know what? Let's actually do this here. So I'm going to then bring it up to what I see happening here. I'm just trying to squeeze this up so I can actually get enough data on the charts. There, right? Look at this here. So this is 1. This is 1, step 1. Step 2, here, 1, this is step 1, this is step 2, through here. Step 3 is very big move happening in gold, right? Then guess what? This here, this is step 3. Then we get a very big pullback with the whole stock market. Everything pulls back. Then we get a big pullback in the stock in gold as well too. Step 3. This here is step 4. This here is step 4. And then we see an even bigger move, even massive move, a much bigger move over a couple of year period after we get the recession and we start to get the bottoms in gold and so on and so forth. That's when we start to see a rapid high. So that is step 4. And this here is step 5. And then obviously this here, over here is step 5. So this is what I'm seeing through here right now, is I'm seeing this happen. So where we are right now is we just got the sideways before the boom, right? And now we're just getting the sideways before the boom. Once we get the boom, we're going to see a big move out. We're going to see a recession. And then the big move comes, all right? And through here, this is when the big QE package is likely to come as well too. So when it comes to gold, guys, this is why one of the reasons why I'm just massively bullish on gold, because we're actually just starting to get this this cup and handle pattern the cup and handle pattern is happening as well too. But traders, this is why gold will do this when we're getting very close to a major recession in the markets. But the major recession is coming, okay? Major recession, so please be aware. But we're not there yet. Again, a few things just to recap this thing here is that the very first thing you want to start to see is look at the interest rates. Second thing is sentiment. There's too much negative news across the markets for the top of the markets. Again, tops in markets don't happen. Tops in everything doesn't happen when there's negative news, right? Tops in markets happen when everyone is trying to jump on the bandwagon. And then also we're going to start to see gold go for a big move, which hasn't happened yet, but it's likely to happen. So hope this helps you out today, traders. And if you'd like to learn more about this, or learn more about actually trading, then actually go to johnsfreegift.com. First thing in the description. Over there, guys, is actually a brand new trading course I've put together. And I'm going to walk you through, there's actually 5 parts to this trading course. And I'm going to walk you through the most important parts to you becoming a really good trader, so you can start to really kick ass, take names, kiss babies, and do really well from trading.